Welcome to the 2021 Economic Depression and Preparation Channel. Thank you for joining me on this weekend edition, January 17th, 2021, here in the States. Please be sure to hit the subscribe button if you haven't already. Preach to me to get the latest, pure, unadulterated financial news in the U.S. and sometimes beyond the world. Today, I want to briefly talk about the producer prices increase moderately in the month of December, the previous month, and also the price increase, as it is anticipated that upcoming President Biden and his administration will print another stimulus, either $1,400 or $2,000, like calls for AOC, and the Democrats are calling for $2,000, but $1,400 seems to be the more feasible option right now, coming in at just under $2 trillion stimulus package that we passed immediately after President Biden takes office later on this week. But in the meantime, producer prices in the United States rose moderately in December, according to CNBC and MarketWatch.com. Reuters is reporting that the data suggested that an anticipated pickup in inflation in the coming months will probably not be worrisome. Quote, the Federal Reserve Chairman Jerome Powell stated that he might let the economy run a little, quote, hot in the next few months, meaning that he doesn't see inflation above 2% as an issue or a problem. Of course, you and I know, and the rest of the world, real world, and the real on Main Street know that inflation really is running at 9 to 10% right now and growing. But numbers can be manipulated, my friends. Numbers in the stock market can be manipulated. Numbers in gold and silver, Bitcoin, whatever you're working with, the numbers can be justified as long as you can justify your numbers with more numbers, then everything will be okay. So the producer price index for final demand increased 0.3% last month after nudging up 0.1% in November. So that's 2 months of price increases here. And the cost of goods is going up 1% on a month-by-month basis. So economists expect inflation to accelerate in the months ahead as government provides more money to stimulate the economy, and weak prices early on in the health crisis fall out of the calculations. But they say that any inflation spark will be temporary against the backdrop of ample slack in the labor market, with at least 20 million Americans on unemployment benefits. Actually, it's double that, but this article says 20 million. It's really 40 million that Americans that are on unemployment benefits, because you have to remember, we only report the initial jobless claims on Thursday, 8 a.m. Every Thursday, 8 a.m., we get those initial jobless claims, which, by the way, have been averaging over 750,000 jobs lost per week. So we can expect high food costs, high energy costs, and high trade services components costs to increase 0.4% each month as we go into 2021. Healthcare costs will continue to go up as well. And so take care of your bodies as well. That's another thing too. As a prepper, as we're preppers, we can prep for, the mental, the spiritual, but don't forget the physical and economic, because if it's your health is one of the most important things next to your wealth and your wealth of family and friends, and of course your physical wealth. But your health is one of the most important things, because you cannot do anything without your health. So remember to protect your health. Go for a walk still. Continue to exercise and continue to get that vitamin D in your bodies, because you're going to need it for this upcoming long haul 12-year recovery process that we're going to be going through. 2008, they were able to paper over the inflation, the Federal Reserve, by printing up a $787 billion stimulus package. Remember, most of that went to the bank. They called it the TARP, Troubled Asset Relief Program. So this time in this stimulus, what they decided is that we're just going to do unlimited money printing, what they call it MMT, Modern Monetary Theory. It's basically going to be printing the dollar into Zimbabwe or Venezuela. So the stimulus checks are going to be, you're going to notice an increase in stimulus checks this year and next year, because the interest rates are going to be low through 2023. That's what the Federal Reserve Bank has committed to. But what's going to happen is they're going to print up this next $1,400 stimulus check whenever we get it. Let's say we get it by March, okay? Then by summertime, that money's going to burn out because the money's being skimmed off the top. There's going to be another stimulus check print. And this time, maybe they'll demand that the Congress or some people, Democrats or other people, will demand a $2,500 stimulus check. After that last stimulus check, which maybe will be, I don't know, sometime after June, okay? Maybe like, school time. Let's say August, September, when the university students go back on their virtual school or whatever. So it'll be sometime in August, September. After that last stimulus, that's it. There will be no more stimulus. By that time, we will have inflation will be running rampant. And on top of that, we're going to have a situation where next year in 2022, the Federal Reserve Bank is going to have no choice but to raise interest rates a little bit because the 30-year T-bond is going up above 1%. It's going to be 2% by that time. They're going to raise interest rates a little bit, like 0.25%, and that's going to cause massive problems for a lot of these people who are counting on low rates to remain through 2023. And that effect, the gasoline prices are going up too. So this has been your report today. Please be sure to subscribe. Thank you very much for listening, and I'll catch you later on the next report.